two differences between direct taxes and indirect taxes are: direct taxation is one where the incidence and the impact fall on the same people. Whereas, indirect taxation, the incidence and the impact falls on different people. Direct taxes are progressive whereas indirect taxes are regressive. Direct taxes are usually applied to income and capital and is paid by individuals. Whereas, indirect taxes is levied on goods and services and is usually paid by the manufacturers or importers. Direct taxes comes directly from income or value assets. Whereas, indirect taxes are levied on the consumption of goods. The burden of direct taxes cannot be shifted. However, the burden of indirect taxes can be shifted. Direct taxes helps in reducing inflation, while indirect taxation can contribute to inflation. Part 2, Direct taxes, personal income tax, corporation tax, capital gain tax, capital transfer tax, indirect taxes, customs duty, excise duty, purchase tax, value-added tax. B part. Outline 3 reasons why governments charge taxes are: the major purpose government charge taxes is that they can fund their expenses incurred for education, healthcare, operating government business entities, etc. to curb inflation by reducing the supply of money in the economy, controlling spending in an economy, thus reduce inflation, to reduce pollution by taxing offending firms, to discourage unhealthy lifestyle, e.g. a tax on cigarettes, alcohol, to protect local and infant industries by taxing imports, to remove competition from local goods in order to protect infant or fledgling industries by taxing imports at high rates. Sources of government revenue, other than taxes, are: revenue gained from various services offered by the government such as the police and defense service, e.g. police issues tickets and fines, penalties and fees. Another source of income can be from government-owned entities or corporations. For instance, in Trinidad and Tobago, examples are like WASA or even the Housing Development Corporation. Dividends and profits earned from public sector companies, investments, royalties. Proportional taxation: by using a proportional tax system, everyone pays the same percentage of taxes. Higher income earners would pay more because, with proportional taxes, everyone pays the same percentage in tax. Higher income earners would pay more from their more substantial earnings than would lower income. Progressive tax: a progressive tax is designed to place the lightest burden on those who make the least money. Hence, the wealthy pay greater percentage of their income. The percentage of tax increases as income increases. The main reason in favor of a progressive tax system is to achieve fairness or equity in taxation, as those who are abler will pay more. International trade is the of exports and imports between countries, which should cause an improvement in people's living standards through the principle of comparative advantage. International trade is the of exports and imports between countries, which should cause an improvement in people's living standards through the principle of comparative advantage. The balance of trade, also known as the merchandise balance or the visible balance. It records transactions in visible exports and visible imports, and reflects whether or not a country is earning enough to spend or spending beyond its means. The balance of payment is a record of the financial transactions between one country and its trading partners, usually recorded over one calendar year. It shows whether the country made a profit or a loss. Components of a balance of payment account are: current account, capital account, official financing. Ways a government can address a balance of payment deficit are: a balance of payments deficit can be financed by borrowing from international financial institutions such as the International Monetary Fund, IMF. Also, the country can draw on its foreign currency reserves built up during periods of surplus on the current and capital accounts.